Hey, looks like we got a question here from Frank G.
Frank writes, are dividends taxable income? Just in case people want to know.
Love the I'm asking for a friend ending, but great question. The answer is, it depends. If the dividends are paid within a taxable brokerage account, then yes, the dividends are taxed. However, if the dividends you received are within a tax-advantaged account, like a 401k, then no, they're not taxed. For tax purposes, dividends are either qualified or non-qualified. Qualified dividends are taxed at a lower rate, but they must meet a few criteria. For example, the company must be American or an eligible foreign organization.
Also, you must own the stock for at least 60 days from the ex-dividend date on. The ex-dividend date is the cutoff to be eligible to receive the next dividend payment.
If the dividend is qualified, it's taxed at a lower capital gains rate,
which, depending on your tax bracket, could be 0%, 15%, or 20% as of 2025.
On the other hand, non-qualified dividends don't meet the requirements to be considered qualified, which means non-qualified dividends are taxed at ordinary income rates, the same rate as your wages. Again, the tax rate will depend on which tax bracket you fall into. As of 2025, those rates are between 10% and 37%.
And remember, depending on your income level, the 3.8% net investment income tax could also apply to dividend income.
If you're worried about keeping track of whether or not your dividends are qualified, issuers of your 1099, including Schwab, they'll let you know. Another thing to keep in mind is that dividends may also be subject to state taxes. Taxes can be complicated and are also subject to change. That's why we recommend always consulting a tax professional.
For a more in-depth look, check out the article Dividends and Taxes, Understanding Form 1099 on Schwab.com.
Thanks for your question, Frank. To anyone else out there with a question or something on your mind, don't be shy. We're here to help.